You ever hear of October? It's this piece of Bitcoin folklore that says after a really gloomy red September, prices are just set to explode. But is there any truth to it?
So what's the deal here? Is this just a spooky story that traders tell each other around the campfire? Or is there a real, tangible pattern at play? Well, let's dig into the data and see if we can separate the fact from the fiction.
All right, let's stop guessing and actually put this whole theory to the test. I've gone ahead and pulled more than a decade of data to see what the numbers really have to say about it. So let's put these 2 months right next to each other, head to head. On the left, you've got September's performance, and on the right, October's. And wow, the contrast is pretty stark, isn't it? Okay, so from 2010 all the way to 2024, Bitcoin's median return in September was a negative 3.5%. And this isn't just a crypto thing either. Traditional markets often see a pretty similar dip around that time of year.
Think about it this way. September has only been a positive month for Bitcoin in 7 of the last 15 years. That's actually less than a coin toss. Not exactly great odds. And then October rolls around. The median return completely flips on its head to a positive 15.4%. I mean, that is a huge swing from the month before.
And it's not just a fluke. October has been a winning month 11 out of the last 15 years. That's almost 3/4 of the time. So you can see why traders get so excited for Uptober.
The data is pretty compelling, for sure, but it doesn't tell us why this happens. So what's really behind this October effect? Let's take a look at 6 potential reasons.
The thing is, it's not just one thing. It's more like a perfect storm. You've got investors coming back from summer holidays, the start of a new fiscal year in the US, and yeah, even the sheer power of a good meme. It all seems to come together to create this seasonal trend.
This is a great example of what's called catalyst clustering. Think about it. You don't release the biggest summer blockbuster movie in early February, do you? No way. You release it in July or August. It's kind of the same with big news in crypto. Major announcements, like the first Bitcoin ETF, have historically dropped in October. It's like companies know it's a good month, so they time their releases to ride that positive wave.
But hang on a second. What if we're looking at this all wrong? What if this isn't about trading patterns at all, but about something much bigger?
Michael Saylor has this fantastic way of explaining this. He says early Bitcoin holders are kind of like employees at a massively successful startup. They're all insanely rich on paper, but they can't just borrow against their stock. So what do they do when they need cash? They have to sell.
So when you see these early adopters selling, it's not a bad sign at all. They're just living their lives, and in a strange way, they're actually helping Bitcoin grow up. Their selling makes it a little more stable, which is what you need to prepare the asset for the big institutional players to feel comfortable getting involved.
But let's be crystal clear about this. This is a tendency. It is not a guarantee. Just because something has happened in the past, even many times, doesn't mean it's going to happen again. Just take 2011, for example. After a absolutely terrible September, everyone was expecting this huge comeback in October. But it never came. It was another down month, which just goes to prove that in the world of crypto, there are no sure things. So what's the bottom line here? The October effect is real, but it's not magic. It's a fascinating mix of psychology, timing, and a really good story that everyone starts to believe in. So much so that it can become a self-fulfilling prophecy. And that really leaves us with a final thought to chew on. When you come across a strong market pattern like this one, are you looking at a reliable roadmap for the future, or are you just looking at a memory of the past? By the way, if you want to check out all the data for yourself, you can find the original source of this analysis linked right there in the description of the video. And hey, if you enjoyed this breakdown, do me a huge favor and hit that like button, share it with a friend, and make sure to follow What Bitcoin Taught Me for more deep dives like this one. You can find us on all your favorite platforms. We're on Twitter, /X, Nostra, Blue Sky, Threads, Instagram, Facebook, LinkedIn, Spotify, and now on YouTube. Thanks so much for hanging out with me today.